everyone, and welcome to the Subservicing Scene. Today, we're going to be focusing on PMI terminations. I'm Mignonne Davis, and I'm joined by Jen Hughes. Together, we run Subservicing Oversight here at Richey May. All right, let's dig in.
Okay, so automatic removal of PMI is required when a homeowner reaches the point where their mortgage balance is 78% of the original value of the property. This means that once the customer has paid down the mortgage enough that the balance is less than 78% of the home's original value, the servicer is required to automatically cancel the PMI provided that the loan is current on the mortgage payments.
All right, so automatic removal sounds like it's based on the original value rather than the current market value of the property. Is that right?
That's right. The original value is used to determine when PMI should be automatically removed. This ensures that customers do not have to continue paying PMI once they have paid off a significant portion of their mortgage.
Okay, let's talk about customer requested removal of PMI and how that differs from automatic removal.
Yes, so customer requested removal allows homeowners to request the cancellation of PMI once they believe they have reached 20% equity in their home. To do this, the customer typically needs to submit a written request to their servicer. Depending on the servicer's policy, the servicer may require an appraisal or BPO to verify that the current loan-to-value ratio has indeed reached 80%. Unlike auto removal, this process can be initiated by the customer at any time, provided the equity threshold is met.
So, Jen, can you give me an example of what would cause the customer to reach 20% equity in their home earlier than expected?
Sure. An example could be where the customer makes home improvements or due to other property value increases in their area. It could also be due to customer paying down the principal balance by making additional principal payments.
Okay. Well, are there any specific requirements or conditions that homeowners need to meet for customer requested PMI removal?
Yes. Each servicer should have written policies and procedures that outline the conditions. One condition is that the loan must be current on mortgage payments. The servicer may also look into the payment history to ensure there have been no recent delinquencies. Additionally, the property value needs to be verified, often through an appraisal, as mentioned earlier.
All right, all great points. So servicers, it sounds like they need to have clear policies and procedures around the PMI removal process, both for auto terminations and for customer requested terminations. And those policies should include what documents are required for customers to request the removal of their PMI. And then auto terminations can be done systematically through their servicing platform. But it's important to remember that compliance and internal audit should regularly test the auto terminations to ensure that the system is working as intended. And compliance and internal audit should also be regularly testing customer requested removals to ensure that the servicer is following CFPB guidelines as well as following their own internal policies and procedures for those removals. Thank you, Jen, for sharing your knowledge with us on PMI removal requirements. And we hope you found this information beneficial. If you have any questions or would like to discuss how Richey May can help you, please contact us. And next time, we'll dive into another one of our subservicer hot topics. Stay tuned for that, and we'll see you next time.